The stock market sold off on Wednesday over fears about what this could mean for the U.S. economy. The Nasdaq closed Wednesday in bearish territory, with the candles below both the 10 and 21-day EMAs, the 10 and 21-day EMAs having formed a death cross, the MACD having formed a death cross, and the RSI below 50. With all technicals being bearish on the NASDAQ closed at its lowest level in a month. Greed is leaving the market, with the CNN Fear and Greed Index down to 67 from a close of 69 yesterday and 77 a month ago. So why did the stock market sell off? What exactly is it the stock market is afraid of? Well, Thursday morning at 8:30 a.m., 1 hour before the market opens, we are getting the Consumer Price Index, or CPI, inflation data. And for the first time in months, it is expected to show an increase in inflation. CPI is expected to have gone up to 3.3% from 3% last month. Investors are afraid that if the CPI data starts to rise, it could cause the Federal Reserve to raise interest rates even more, which could send us straight into a recession. History has shown that inflation is stubborn and can last longer than expected once it becomes elevated and entrenched. Health insurance costs are expected to start climbing now that a statistical adjustment the Bureau of Labor Statistics uses expires. That adjustment has caused the health insurance component of the CPI to show a 24.9% slide over the past year that should now reverse. Wait. The Bureau of Labor Statistics has artificially lowered health insurance costs by 25%, and now they're going to allow health insurance costs to start rising again? They literally manipulated the data to make it appear as if CPI was much lower than it actually was. No surprises there that the government has manipulated the data and lied to all of us about what true inflation actually is. But now that that manipulation is expiring, we're finally going to start seeing the real CPI inflation numbers, and they are expected to rise. Gas prices have soared this summer as the cost of U.S. crude jumped nearly 16% in July. A gallon of regular unleaded now costs $3.82 on the national average, up more than 8%, or nearly 30 cents per gallon from the same time in July. And for businesses and consumers, that could be trouble. Credit card debt in the second quarter surpassed $1 trillion for the first time, and some people expect small business debt default rates to escalate as interest rates stay high. We've got a pipeline full of growing delinquencies. All of the trends are showing no abatement. This is something that's going to get worse before it gets better. If you're subscribed to this channel, you might recall earlier how I explained how business default rates and business bankruptcies are at the highest level they have been at since 2008. Now, look, I hate to compare anything in this economy to 2008, but reality is reality and facts are facts. The business sector of the economy is in the worst situation it has been in since 2008. And by the way, if you guys aren't subscribed to this channel already, click that subscribe button, give me a thumbs up, and if you are subscribed, double check to make sure the bell icon has been clicked and it is set to all. Speaking of other things that are going to get worse before they get better, the Panama Canal pileup of ships now reaches 154 vessels. As shipping congestion at the Panama Canal as well as U.S. ports continues to pile up, this is going to cause a supply chain disruption. The same type of supply chain disruption that caused inflation to rise in the first place. So, unfortunately, where it stands right now, all signs are pointing to inflation going up, not just in July, but continuing to go up in August, September, October, and onward. And this spells really bad news for the Federal Reserve because this means they're going to be forced to raise interest rates much higher than anybody has expected in order to continue to fight inflation, continue to try to get it down. That in turn could cause a recession if we're not already in one. And this is why the stock market is selling off. It's selling off over fears about this occurring. Now, keep in mind that August, the stock market is historically flat, and then September is historically the worst month of the year for the stock market, before October historically marks the bottom and it rebounds. Now, as we enter this period where the stock market historically slows down, there are some ways to make money. One of the ways is I have an October call option on VIX set at 20. That call option is up slightly. If we do, in fact, get the slowdown that the stock market historically enters, then that type of call option should make money. Other options include leveraged inverse ETFs, which go up as the stock market goes down. One would be SPXU, which will go up as the S&P goes down. Another would be SQQQ, which will go up as the NASDAQ goes down. But if you're a long-term investor, then this might actually be a great opportunity to buy the dip. Because as the stock market goes down in August and September, like I said, it historically bottoms out in October, and it historically starts to rise and rally after that. So for long-term investors, over the next 2 months, you might have some great dip buying opportunities. Now, of course, as I explain these plays to you, I don't know what the stock market's going to do in the future. I'm just letting you know what it might do based upon history. Nothing I'm talking about is a recommendation to buy, sell, or hold any asset. I am not a financial advisor. These are just my opinions, which may or may not be accurate. Please do your own research before you go invest in anything. Now, another fear that investors have right now is that the sputtering trade is fueling fears of a fractured global economy. Global trade is currently weak, mostly because demand for goods is weak. Higher interest rates in the US, Europe, and other economies battling with inflation have led to a broad global slowdown. Broad global slowdown is a really nice way of saying global recession. And of course, the banking problems aren't over yet either. Many people expect more banks are going to collapse as the year goes on, especially as the commercial banking crisis gets underway. If you're not familiar with the commercial loan crisis that's affecting banks, I recommend you watch some of the prior videos here on this channel where I explain the commercial loan crisis and how this is causing banks to collapse. Now moving on to earnings that came out on Wednesday, Roblox shares dropped 20% after the company missed estimates on both earnings and revenue. Roblox shares were down nearly 22% on the day. And Plug Power reported earnings. Their revenue beat, but their earnings missed. Plug Power said second quarter revenue increased 72% year over year to $260 million, which beat the consensus estimate of $242 million. But Plug reported a quarterly loss of 40 cents per share, which was worse than analyst estimates for a loss of 26 cents per share. Plug Power was down over 4% as of the recording of this video after already falling over 1% on the day. And the trade desk posts upbeat earnings in a tough ad environment. The trade desk logged a second quarter net income of $33 million or 7 cents per share, whereas it had posted a net loss of $19 million or negative 4 cents per share in the year ago prior. So a huge beat and increase on revenue. The company also reported adjusted earnings per share of 28 cents. That's compared to 20 cents per share in the year ago period and better than what analysts were expecting at 26 cents per share. But do keep in mind that these earnings were adjusted, meaning they simply stripped out a couple of items to magically make earnings better than they actually were. The real earnings actually came in much worse than expected. As a result, the trade desk was down about 4% after hours after already falling 5% on the day. This is very unusual for the trade desk. The trade desk normally beats earnings and skyrockets after earnings. So for it to have this kind of a major fall is extremely unusual. It just goes to show how dangerous and difficult playing earnings can be because you literally have no clue what that stock is going to do after it reports earnings. It's a complete gamble. And Wynn Resorts swung to a profit on higher revenue. The Las Vegas-based resorts and casino operator had a profit of $105 million or 84 cents per share in the second quarter. Analysts were only expecting a per-share earnings of 66 cents. Revenue also beat. Revenue rose to $1.6 billion from $900 million a year ago, beating the $1.54 billion expected by analysts. Wynn Resort stock was up 2.4% as of the recording of this video, although it had fallen 1.4% on the day. If we do enter a recession, like so many people are expecting, there are actually two categories of stocks that typically do quite well during recessions. One of those is alcohol, the other is gambling. For some reason, even during a recession, alcohol and gambling, not only do they not go down, they actually go up. As I guess people are gambling, trying to make money to pay their bills or something, I'm not really sure. And maybe they're drinking their woes away. But for some reason, gambling and alcohol stocks rise if we do enter a recession. So just keep that in mind as possibly some stocks you might want to look into buying into as sort of a hedge for a downturn in the economy. And if you're looking for a broker to buy stocks on and you want to get some free stocks to help you out, I want to remind you that Moomoo is offering up to 16 free stocks when you open an account and fund it with at least $100. If you open an account with Moomoo using my link in the description or first comment below and fund it with $100, you're going to get 5 free stocks. If you fund your account with $1,000 or more, you're going to get 15 free stocks plus $50 cash. And if you fund it with $5,000 or more, you're going to get 16 free stocks. One of those stocks is going to be worth a lot of money. All you have to do is keep your money in your account for at least 60 days to get those free stocks. And if you're in Canada, I wanted to let you know that Moomoo is now available in Canada. If you attempted to pre-register before and you were unable to, I've updated the link for Canadian residents. So go ahead, try again. Down in the description or first comment of this video is a link for Moomoo in Canada. Of course, Webull is also offering a great promotion for U.S. residents with up to 12 free stocks using my link in the description below. And if you're in the UK, Webull is now available in the UK. If you sign up now, you're going to get 2 free stocks with a minimum deposit of £100. And options trading is coming on Webull for UK residents soon. So go ahead, open up your account now, get those free stocks, and get ready to start trading options in the UK very, very soon. And for UK residents, I do need to let you know that if you do open an account and put your money in there and start trading, that your investment is at risk and you could lose money. Now moving on to the major earnings everybody wanted to know about, Disney posted mixed results for the quarter, plagued by streaming woes and restructuring costs. Earnings were a beat, coming in at $1.03 per share versus 95 cents expected, but revenue was a miss at $22.33 billion versus $22.5 billion expected, and Disney Plus subscriptions were also a miss at $146 million versus $151 million expected. Despite the bad earnings, Disney stock was up over 4% as of the recording of this video. Again, just showing that you never can guess what a stock is going to do after earnings. A company could beat earnings and fall, they could miss earnings and rise, you just never know. Earnings is complete and total gambling, so please, if you are playing earnings, be careful. Now, if you got a lot out of this video, be a good friend, share this video with your friends and family so that they will know what's going on in the stock market as well. Don't forget to hit the like button and subscribe. If you're on YouTube, click the bell icon and click all so that you can get notified of my next video. And if you missed yesterday's video when I went over some more important earnings as well as ways you could profit during this downturn, make sure you watch the last video that I uploaded here.